Right, it is good morning still, and welcome to the platform. On today's edition, we are looking at financial literacy. Zambia recently launched the 2024 Financial Literacy Week, which will be running from the 18th up until the 24th of March this month. This is basically to try and sensitize citizens on financial matters. So today on the platform, our role today is basically give awareness to the people of Zambia on the knowledge of how to make smart decisions with money, how to prepare budgets, knowing how to save, knowing how to invest and what to invest in. With me on the show is Mukonke Mukonkela, who is our financial expert from Insight Partners Africa. Mukonke, it is a good morning and welcome once again.
Good morning, Leslie. Once again, how are you doing?
Very well, thank you. And how are you?
Good, thanks. It's nice to be here.
Definitely is. And
Yeah.
the good thing about what we're doing now is
Mm-hmm.
that we actually will be taking in a number of calls as well. So if people have questions
Yay.
on finance today, they get the opportunity to ask as we have that time, fortunately for today. But as we start off, why do you think this financial literacy week is important? Like why is it important to our listeners and to people in general?
Financial Literacy Week, which we celebrate annually in March, right?
Mm.
It's very important because, research indicates that very few people are financially literate. And what that means is very, very few people can manage their money, their personal finances. Others don't even know that they can access financial services like opening a bank account, keeping money in the bank account, growing that money, how they can budget the salary so that they can, spend their money wisely and feed for their families. So many people are unaware of how they can manage their personal finances. So Financial Literacy Week sheds light. We spend an entire week talking about financial literacy. How do you save your money? How do you budget your money? We even include the kids. How do we start, transferring financial knowledge to our young ones during this week? So it's a very important week for us as a nation because we bring to light, all this information that we need in order for us to manage our personal finances wisely.
Mhm. Now,
Hmm.
when we talk about financial literacy, we're talking about four basic fundamental pillars, which are debt, budgeting, saving, and investing. Would you kindly take us through each of those and how they all relate together to create financial literacy?
Thank you. So let me try to put them in the right order.
Okay.
So you're definitely right. When we are talking about financial literacy, we are covering these aspects. So let me start with saving. Because if you're talking about personal finance management, the main goal is for you to be able to save money, not just and money that you need to use not just for now, but also for the future when you are unable to work. So that's why when we're talking about financial literacy, we are covering all aspects. And the first starting point is saving. You need to be able to set aside money. As you know, we all do different things. Some of us are in employment. We are making our income by being employed. We offer our services to our employers. Some of us are in business. We sell our services to clients. But at the end of the day, we are all making revenue or income that we then need to ensure that we grow. So when we are able to set aside a percentage of our revenue from our business, from our employment, set aside that amount of money regularly, we can then start using that saving to invest, which brings me to the second pillar, investing. It's from your savings that you can then start investing the money. And as you start investing, you also need to be considerate of your debt. And I'm happy you've mentioned debt, Leslie, because what normally prevents majority of us from growing our money is the debt burden. We are highly indebted. We've borrowed from our relatives, from microfinance companies, even from financial institutions. Some of us are very fortunate to access big loans from these institutions. And debt becomes a hindrance for us to, manage our personal finances well. And so definitely we also need to look at how do we manage our debt, how do we repay back debt so that at the end of the day we can still get money from our investments. Budgeting as well. Budgeting is a discipline that is so hard. Yes, many of us don't like to budget. In fact, many of us don't even like to sit down and plan for anything. And it's all of us, Leslie. It's not an easy thing. Nobody wants to sit down and start creating plans. My mom says if you think too much, you can go mad. So nobody really wants to sit down and start planning and budgeting. These are not natural things to us human beings. But you need to understand that if you are going to live a less stressful life, you need to spend a few minutes once in a while and think about your personal finances. And that also includes budgeting. How do we spend money wisely for our upkeep monthly, but also how can we save a percentage of this revenue or income so that we can start investing in assets? Because at the end of the day, it is in the investment that you are going to gain financial independence, that you are going to be comfortable, not rich. We're not talking about getting rich here. We're talking about being comfortable and being able to live the rest of your life in the same way you're living your life right now, where you can afford whatever you're able to afford right now, and you're able to maintain this lifestyle until God decides, or until the end of the days for you. That is what we are talking about.
Now, financial literacy, has these principles they talk about. The principles like earn, they save and invest, they protect, they spend, and they borrow. Uh, would you kindly highlight these principles and what they mean? I know I'm taking you back to basics, but yeah.
No, it's actually very great. I love the way you've put it, because you've used different terms to represent basically what I've explained. So to earn, for example, you've said earn and save, right? So save is really just save, set aside money. Set aside money. So perhaps what I could add on is, where can you save the money? I think this is a question that we want to know. Because yes, I would love to save, but should I save the money under my bed? where where should I save the money? Um, and what I like to say about saving is, know that saving is setting aside money in order for you to invest it later on. Don't look at saving as a way to grow your money, because no one has ever grown their money from savings. And why do I say that? Because the interest rates that you get from saving money, let's say at a financial institution, is not significant for you to grow that money. If we add on inflation erodes the purchasing power of your money. And if you also add on other charges that our financial institutions charge us, you'll find that if you keep money at the bank, it might not really grow. So saving is to set aside money so that you can reinvest it later. Earning is about making the money that you can save. That is what earning is. So how do we earn money? Some of us, I said, are employed. Well, like I personally, I do businesses. I do business. My company does accounting services. We also do financial management training workshops. So for me, the biggest chunk of my revenue comes from training, and then from there, I start looking at saving and investing. So we all make our money differently. So however you make your money, you are earning it. That's the earning part, and then you are saving a proportion of that amount. Because even if you run a business, it's not every amount of money that you're going to get and start saving and investing, because you want to reinvest it back into your business so your business can grow. You also need to pay taxes. So it's not all the money that you get from your business that you then start investing. Even from your job, it's not the entire salary that you get and start investing. You need to take care of your household expenditure. And to protect is where, and a very important aspect, which oftentimes I think we ignore. To protect is to secure your money. And one way you can secure your money is by insurance. And I know this is another issue we have in Zambia, Leslie. Insurance, what is that? I mean, I'm just giving some person money for free. That's usually the thought. But insurance protects our money. Especially, let's say if you run a business and you've invested a lot of money in that business, the way you protect that money and your asset is through insurance. And for some of us that are in business, there's insurance products or services that can help protect us from any errors that we might make in our businesses. For example, for me as an accountant, I'm required to pay an insurance to protect me against if a client sues me for maybe doing wrong financial reports for them. Okay, the insurance company can cover me for that indemnity. So insurance also helps to protect our money. even let's say vehicle insurance that many people know, you've got a very valuable asset, a house, vehicle, and all of that. So that is the insurance aspect. Borrowing is all about getting money from a financial institution, to whenever you need to, if you don't have money. Again, borrowing is something you need to look at in terms of your personal finance management, so that it does not hinder you from investing. For me, you need to really control your borrowing, your debt. So you are very right when you cover this for in that regard.
Now, it is common knowledge, that people are failing to save while others manage.
Mhm.
But what are the basic steps, for one to manage saving with whatever they earn or invest? Because even for me, I think it's one of the biggest challenges. You're earning your money, but how do you save and invest while you're still living the life you choose to live?
It's really hard. Yes, majority of us earn not even as much money. We are barely making ends meet, and I agree, things are not easy, things are tough. But then what I like to say is, regardless of how hard things are, and no matter how much money you make, it's the discipline. You need to exercise that discipline muscle of setting aside an amount of money. And even if you get 1,000 kwacha, you can say every month I'll be setting aside 10% of that 1,000 kwacha, which is like 100 kwacha. And then I'll only live on 900 kwacha. So the way you need to look at this really is, it plays with your mindset and how you approach your livelihood in terms of how you take care of your life. So if you earn 1,000 kwacha, and automatically you've told yourself 100 kwacha is not, I will not touch 100 kwacha of this 1,000 kwacha. So even when I get paid, 100 kwacha will automatically go into the savings account. So you need to tell yourself that I will leave off the 900 kwacha. And so the decisions of how you spend money should be based on the 900 kwacha. The 100 kwacha is off the basket. And so, yes, it is really hard, but there's no other way of you saving money, investing money, other than disciplining yourself to set aside even a small amount of money. Because eventually that small amount of money, the 100 kwacha, is going to help you, because you're able to use that 100 kwacha to buy an asset, to invest it in a government bond or in a unit trust, and then that money will start making more money, and that is how you start building your wealth. So it is hard, we agree, but there is no other way, and unless you just consider the discipline side of managing your money.
Now we are moving towards talking about investments.
Mhm.
But people often encourage everyone to invest.
Yeah.
Does investing only favor business or individuals with big amounts, or can you think about investing even when you're earning very small amounts?
I think you can think about it even with small amounts. Why do I say that? Yes, I know we often say the biggest returns are in huge amounts, but even in small amounts, you need to look at what investment vehicle. I talk about a vehicle. And why I like to say vehicle, which is actually a common term, is because these investments are taking you to somewhere. You've got a goal. What is your goal? So you need to use a vehicle to get you to that goal. So that is why when you are talking about investing, always start with your goals, because it will determine what kind of vehicle you need to use. Should you use a plane? Should you use a car? And also, where are you heading? Are you heading to Livingstone? Are you heading to Chisamba? What's the distance? Because all those factors matter in terms of what vehicle you choose and how much money you need to invest. So how much money you need to invest in a particular vehicle depends on your goals, and also how long you can keep that money in that investment. And also, let me add on before I answer your question. When you're thinking about investing, always know that you need to invest money that you cannot risk to lose. Money that you cannot risk to lose, money that you will not need to use to eat, to feed on tomorrow, because investing is a long-term game. So look at money that you can't afford to lose. So how much can you make money from small investments? Yes, you can. And especially for beginner investors, some of us are just beginning. It is the best way of us learning this world of investing. If you can put, let's say, 1,000, 5,000 kwacha in a unit trust, give it to a fund manager, and then regularly ask them how your fund is performing, how has it grown. Then you are going to start really understanding. Then you are going to start understanding. And as you gain that knowledge, you can then start growing the amounts of money that you invest. So I would say even with smaller amounts, you can start, because smaller amounts actually allow you to start learning about all the investment vehicles. And then as you gain that knowledge and you become more confident, you can then select investments that match with your risk tolerance, with your goals. So definitely let's get started. And in government bonds, you can start with 1,000 kwacha. You can choose maybe a 2-year bond, put 1,000 kwacha. Do try that. Right now, a 2-year bond is giving you 17% interest. So every 6 months, you get a coupon return of 17% on 1,000 kwacha. Just try it and see how that works out for you. Then if you find that it's beneficial, you can then start increasing your investment.
Now, as we talk about investments, this is Financial Literacy Week, of course, and a lot of our listeners as well, I know, are trying to invest and trying to save and trying to somehow multiply the money that they have. And one of the ways that everyone seems to be talking about recently is the issue of the concept of stocks, bonds, trusts. Could you briefly run us through what stocks, bonds, and unit trusts are and how they differ from each other?
Thank you, Leslie. So stocks, bonds, unit trusts, all these assets or vehicles that you can use to invest your money in so that you can make a return on your money. So let me start by talking about stocks. A stock is giving money to a company that, as the company is looking to grow their business, or they are looking for money for their operations. So they will go to a stock market. In our country, our stock market is the Lusaka Securities Exchange. So they will say, we want to sell shares, part of our business, to the public, because we need money for our operations. So they will list, it's called listing. So they will list their company on the Securities Exchange, and then the public can then buy a share. That is stocks. And what is the benefit? What do you get from buying the shares? So what you get from buying shares is because you are now a shareholder, it's like you own a part of that business. You'll be able to get a share of the profit as well, based on your shareholding percentage. So if, let's say, your shareholding percentage is 2% and the company makes a profit of 1 million kwacha, it means you are entitled to 2% of that 1 million kwacha. So the more you have in terms of shareholding, the more you can get in terms of dividends, as well as capital appreciation. So what is a dividend? A dividend is simply a share of the profit that the company makes. So that is what the buying shares means. It means that you are giving money to this company, and then at the end of the year, they're supposed to, if they're doing very well and they've declared a dividend, they're supposed to give you a percentage of the profits that they've made. If we talk about bonds, bonds have got two aspects. You can buy government bonds or even a corporate bond. I know most of the times on previous discussions, we've spoken about government bonds most of the times, but actually even corporates also issue bonds. But let me just talk about what we are familiar with in Zambia so far, which is the government bonds. When you talk about government bonds, you are lending money to the Zambian government for their operations as well. The government wants money to build roads. They want money to fund the schools, hospitals, and all of that. So when you give money to the government, that is what is called a bond. And in fact, they are got government securities, because there are two types. So government securities. So the first type is called a Treasury Bill, which is a shorter term investment, less than a year. That's a Treasury Bill. It's also referred to as a money market fund. And then we have the government bonds themselves, which range from 2 years to 15 years for Zambia. So the government bonds are longer term securities, government securities. So what's the benefit of the Treasury of the government securities? The government securities benefit or profit that you get is that this is assured. It's a fixed investment. You give money to the government assures you that, Leslie, every 6 months I'll be giving you back your interest. And then at the end of the tenure that we've agreed, let's say you buy a 2-year bond, at the end of 2 years, I will give you the face value amount. The amount that you gave me, I'll give you the full amount, but after 6 months, I'll also be giving you a coupon income, which is also referred to as interest. That is what the government bond is. For Treasury bills, we buy them at a discount. And I may explain later, depending on on our discussion. But then the Treasury bill is we buy it at a lesser price than what the government will give you when the Treasury bill matures. So what we make on the Treasury bill is what we call the interest income. So that is how the bonds work. And then let me also discuss the unit trust that you referred to. So unit trusts are a combination of all these investments that we talk about. Unit trusts are normally managed by professional fund managers. We've got a number. I will not mention their names, but if they're listening and would love to sponsor our programs, they can get in touch with me, and then we can start mentioning their names. But the unit trusts are managed by fund managers. So these fund managers have got a target. They start with a goal to say, we want to maybe invest in government bonds plus shares. They could say we have a combination because they want to have a variety. We call it a diversified investment. So they will have a fund that they'll say we'll invest part of our money in the bonds, part of our money in stocks, maybe even part of our money in real estate. So this could be a mixture, and then they break down this fund into units, small units. Then they ask the public to buy these units. So when you are buying a unit, you're simply buying a share, a share of whatever this fund manager has created, the investment plan that this fund manager has created, and all you are buying is a share. So, and the profit that you make from the unit trust depends on how the fund is performing. So that is what unit trusts are. And it's a good starting point also for beginners, because you are not making the decisions. A professional investment manager who's been trained to do this and is regulated by the Securities Exchange Commission, the SEC, is handling the finances for you. And all you do is maybe regularly you can check in with them. So that is what unit trusts are.
Okay. All right. This is the Financial Literacy Week. So we are talking about the finances, and this right now we're sort of talking about investments. If you have any questions you would like to ask, you can give us a call on 0953 566 234. And of course, we have our financial expert Mokonki Mokonkela, who will be able to answer some of those questions you may have. So you can give us a call, and let's definitely hear from you. Now, we're still looking at this issue of bonds, stocks, treasury
Bills,
unit trust. What are the risks associated with investing in these asset classes, and how can investors sort of mitigate them?
Good question. Risks. Let's talk about the treasury bills. I'll start with the treasury bills. What's the risk of investing in the treasury bill? Treasury bills are short-term investments. The return on treasury bills is not as big as we would want it to be, because let me give you an example. If you buy a treasury bill, you want to buy a face value treasury bill with 100,000 kwacha for a 91-day treasury bill, and you've got 100,000 kwacha. You buy it at a discount, let's say 97,000 kwacha, because there's a cut-off price that the Bank of Zambia uses. So you buy it at a 97,000 kwacha. That's a 91-day treasury bill. Now, 9,000 kwacha. At the end of 91 days, Bank of Zambia will give you 100,000 kwacha. How much profit would you have made on the 97,000? Only about 3,000 kwacha. That is not a lot of money. So with short-term investments like treasury bills, really it's low risk, low returns. Low risk, low returns. And let's talk about the government bonds. One risk that I can consider right now is the fact that you cannot sell back your government bond to the government. You cannot sell your investment in the bond back to the government. Whereas in some bonds, like the 7-year, 10-year, and 15-year bonds, these are called callable bonds. The Bank of Zambia can actually call them back if they see that the market indicators show that interest rates have come down and the bonds that they had given you have got high interest rates. The BOZ can call these bonds back, meaning that they'll pay you your full amount, face value amount, and also any outstanding coupon interest payments that are due to you. So that's a risk for me, because if you go back my bond, I may not be able to find a similar kind of investment, paying me the similar kind of coupon or interest income that you are giving me previously. So that is a risk that you need to carefully look at when you're investing in government bonds, even when you're selecting which kind of bond you need to choose. Because the 7-year, 10-year, 15-year bond can be called back if after saving 60% of their life. So take note, it's after saving 60% of their life, it can be called back. And but whereas the government has that advantage of calling back bonds, we don't have the advantage of saying, can we sell you back our bonds? If I don't want this bond, can I sell it back to you? What Bank of Zambia will not take that, but you can sell your bonds on the secondary market. So if you've got an investment in the bond and before it matures, you need the money, you can go to the secondary market, the Lusaka Securities Exchange, and sell your investment in that bond. But the question is, will I have ready buyers to buy my bond? So those are some of the risks that we get to see when it comes to investing in government bonds.
Now, I've noticed that most of these, investments we are talking about are kind of long-term. They're all looking at, a number of years and so on and so forth. But how does an investor's time horizon, if we call it that, affect their investment decisions in stocks, bonds, and unit trusts? We looking at, your age, at where you are, if you are towards retirement, are these things you want to invest in, or what time is best to invest in what when you're looking at these
good investments? That's a very good question, Leslie, and one that you need to think about as you start planning your investment journey. You need to consider how old you are. How old am I? And if I had to put money in the stock market, which takes a relatively long period of time for you to see a return, can I afford to put money in the stock market? And it's going to take maybe 20, 15 years for me to see even a capital appreciation, meaning that the value of my investment has gone up. Do I have that luxury to wait that long? So you need to consider how old you are. And that's why I say, if the young people are listening, this is your time. You are so advantaged such that you've got time helping you to utilize what is referred to as the compound interest. So if you're a young person, you can invest in the stock market. Let's say you're 20 years, and we're saying that maybe it takes 20 more years for you to see the actual benefit of your investment in a stock. If you're 20 years and it takes 20 years for you to see that, it means that you'll be maybe 40 years and you could be a millionaire depending on what stocks you had selected. So for young people, time is to their advantage, because they can also take advantage of what is referred to as compound interest. But particularly for the stock market, young people can actually put money in a stock and not even worry about how it's performing, whether the share price has gone up, the share price has gone down. They won't really be worried, because at the end of the day, stocks normally tend to perform better in the long term compared to all other investments. That's why they are the most risky investments you can make, compared to even investing in bonds and Treasury bills. So consider how old you are as you are making investments. For older people, investing in the stock market could be a little bit risky, and you don't really have that time to ride the waves. We say riding the waves of fluctuations in stock and share prices. You could consider more secure investments like government bonds that are guaranteed or assured. After 6 months, you get your coupon income, and if you are lucky to have a substantial investment in the government bonds, you can live off your coupon incomes, or you could also decide to reinvest the coupon incomes, because when you reinvest the coupon incomes, you'll be taking advantage of compound interest as well. So that is how you need to think about the age and how you choose your investments.
So when you're younger, the stocks are more viable.
Yes, you definitely can take a risk in terms of investing in the stock market, because you've got all the time to ride the waves.
And when you're older, the bonds.
When you are older, so this is not the rule. These are just suggestions and recommendations. Even when you are older, you can invest in the stocks. It all really depends on your risk appetite, and you could be probably investing for your maybe your children. I don't know, but if you are older, you will lean towards more secure investments, and more secure investments are investments like the bonds, because you are guaranteed of getting a fixed income. Whereas if you look at the stocks stocks, dividends are not guaranteed. If the company doesn't declare a dividend, it's not guaranteed. Capital appreciation depends on the performance of the company and what sector it's in. So that's why if you invest in the stocks for the long term, you stand an advantage, especially if you selected a well-performing stock, a company that has future plans and potential for growth. So these are growth companies. If you are really good and you selected a company that is growing, then we can expect you to make money off the stock of the shares. So it's not a rule, but definitely you lean towards much more secure investments. If you're older, if you are younger, you can take the risk.
You can give us a call. We're talking about financial literacy today, and basically for now we're sort of talking a bit about stocks and bonds and unit trusts and treasury bills and so on. And I know a lot of people usually have questions on this. Our phone lines are now open. It's 0953 566 234. And you can also send us a voice note as well via WhatsApp, and we definitely will be able to get your question across. We have Mukonke with us in the studio today from Insight Partners Africa, and she will be able to answer any of the questions that you may have. Some of these questions I'm asking are questions that even I personally ask, because I wonder, like for instance, market conditions. Change market conditions, how do you impact the performance of stocks, bonds, so on and so forth? What strategies, should investors employ during different market cycles? And when we're talking about market cycles, like you're talking about inflation, you're talking about, there's quite a lot involved. But before you even answer that, we'll take our first phone call. Radio 4, hello. Radio 4, hello. You're through to the platform.
Yes, my name is Philip
from Kitwe. Yes, sir.
Yes, I wanted to find out if someone wanted to invest like this, where do I find those options where you can choose where to invest the money? I wanted to know if actually where somebody can go and then invest the money.
Okay. All right, thank you for that question, and I'm sure Kobe will be able to answer that as well. You can give us a call, and I think his question is a common question as well that comes through. You hear people talking about bonds, they're talking about stocks, they're talking about all these types of investments. But where do you start from? Here you are, you're a layman, you've never heard of these things, and you're hearing about them, and somehow people are investing and making their money. Where do you start from?
Thank you, Leslie. When I get that question, I feel like I'm actually not doing the country a favor. And why do I say that? Because we need to have investment firms, and definitely Insight Partners, we're working towards that. Because having spoken so much about bonds and what I think it's just the right thing to do, because ideally, I've gotten the question from Kitwe. And good morning, Kitwe, Chingola, my hometown. I hope people are listening. So essentially what you need to do is we need to have investment firms. There are a few. I won't mention their names. Again, if they are listening, they can approach us, sponsor this program, the platform, and we can mention them. But we need to have, there are supposed to be companies that are supposed to help you to plan for your money and also invest the money on your behalf. They may also be brokers. A broker is a company that is like the middleman that you're supposed to use to buy and sell maybe shares. And for the bonds, you can do it even from your bank. So if you've got a bank account, you can instruct your bank to buy bonds on your behalf. So if you want to start investing in the government bonds, if you've got a Zambian bank account, Kwacha designated, go to your bank, tell them, I want to buy a bond or a treasury bill. You can start from there. But if you want to invest in the stock market, shares and unit trusts, you can go to fund managers. We've got a number of them. Go find one of them, tell them I want to invest in a unit trust. For the stock market, find a broker. I'm sure even in Kitwe, we've got brokers in Kitwe. Find them. Yeah. And how do you know these brokers? You can also search them online. Go to the SEC, the Securities Exchange website, or the LUCE website. You will find a list of approved brokers. when you're talking about where can I go, where can I start, which companies, be very careful, because these are regulated sectors. Regulated means we've got the government is trying to ensure that your investment is protected, and so you need to check whether this company is registered with the SEC, the Securities Exchange Commission, and they're the only companies that are allowed to trade in shares, in stocks, in bonds, and then start having that discussion with them. That is how you can get started. But definitely there's quite a lot that we need to do in terms of even the awareness of these companies and their services. That is why this Financial Literacy Week is very fantastic.
It is actually very, very important indeed. Now we also, as we're talking about the Financial Literacy Week, remember you can give us a call on 0953 566 234. We definitely would love to hear from you. We've talked a lot about these investments. We've talked about bonds and so on and so forth. We also need to talk a bit about financial literacy and students, young people. Does financial literacy actually matter to students and young people?
Oh my God, do you know what? I wish there was a Mukonki when I was young on radio. I wish there was somebody like me on radio when I was in my 20s, because I heard everything that I talk about. I don't think me and you would be in the same room, Leslie. I'd be on another level. I am telling you, young people, this is your program, guys. If you're a young person, you're in your 20s, you're listening to this, take it and run with it, and come and tell me 10 years later. So for students, those at the University of Zambia, CBU, Cavendish, and all others, do you need to listen to these programs? Do you need to look at your finances? You do. You do, because this is the right time for you to secure your savings and to start investing, because with your age, you can even have a small amount, 10,000 somewhere. By the time you're getting 30, 40, that money would have grown. And this is money that you just invest and even forget that you've invested. But later on, you actually see that it has grown. If you're fortunate, it could have tripled, it could have doubled, I don't know, quadrupled, however you want to look at it. So students, it's very important. And even for students, the discipline of, let's say, budgeting your finances as you're in college or university, if you can start budgeting your finances really well, the income that maybe government gives you for your what do they call it? The student what?
The food allowance.
A food allowance, meal allowance, yes. How do you budget it so well that you can even save a little bit of money from that meal allowance, and that you can, start saving. By the time you're graduating, you'll have a small amount saved. And when you create these disciplines, Leslie, even when you start looking for a spouse or marriage, you would have already learned financial management. You have less stresses in your marriages.
So finances do play a role in successful marriages, huh?
What? Are you asking me that question, Leslie?
We are looking at financial literacy, but nonetheless, people say that if you want to be wealthy, if you want to be rich, you have to invest in business. How true is that adage?
I would say to a certain extent it is, but there are risks to everything, and not everybody can run business. And when you look at business, which is why actually it's true you can make the most money through owning a business, but it's also the most riskiest avenue you can pursue. This is because with running a business, it's an active investment. You have to be there yourself constantly, regularly. Some of us, especially as the ladies, we might not really have the appetite and the energy to manage business. But definitely, if you are able to find a good business idea that is scalable, that scalable means that you can, grow and cover a lot of people, business is definitely the best way you can make a lot of money. But it comes with a lot of risk. Research indicates that a huge chunk of businesses fail within their first 5 years, mainly because they don't know how to manage their cash flow. They get a lot of debts, and their business are unable to grow. And maybe even the business model wasn't right. So very risky.
No, when there's a slump in the economy, there's a bit of a dip. Like right now, it's not just in Zambia. You look at the UK, you look at the United States, you look at any country right now. Most countries are undergoing. I don't know. It's not. They're not calling it a depression yet, but they're undergoing quite a lot of challenges in terms of business and so on and so forth. What kind of advice do you think you would give to a business owner in this time? And is it advisable to continue getting into business?
Yeah, so the recession, right? So world over, we are facing challenges. I mean, if you look at, and they're stemming from a lot of issues. First of all, COVID itself had a lot of impact on business operations worldwide. We are still recovering from the impact of COVID-19. Add on top of that the Ukraine war that affects the supply of oil and all of these issues. So definitely many countries are facing challenges with their economies, and we've seen this with a daily increase in inflation. Exchange rates are not constant, they're not even reliable, dependable. For Zambia, the depreciating kwacha, just a few weeks ago, we saw a huge appreciation in the Zambian kwacha, and then all of a sudden we are back, depreciating. For a business, what do you need to do? It's a dicey situation, but you need to be creative, honestly speaking, and innovative and agile, meaning that if you are able to think of better strategies or other products or services that you can venture into, start looking at that. Let me give you an example personally of Inside Partners. And I mean, before COVID, we would do in-person financial training workshops. We rarely did online training programs. But then with COVID, we were able to do online training programs on Zoom. And we've received interest even from people that just watch our YouTube channels that want to be trained in debt management online, in a payroll tax, managing your payroll taxes online. And so we don't even need to travel. Like recently, I did a training on payroll management for a client based in Chingola. I did not need to travel to Chingola. I did it online via Zoom. And so when you are facing challenges, it is time for you to be creative. Look at other avenues. And I think challenges actually make you more creative, to think outside the box, and you might even find a better strategy that will strengthen your business. So it's hard, but it's time for you to go back and look at your plans, your strategies, and see how you can improve on those strategies. It's not easy, but there's no other way.
It is quite a tough period for a lot of people in small businesses. But when you are getting into small businesses and entrepreneurship in general, how important is education?
Education is important. Education is very important to business and to even to just our life. But then the question really is, what kind of education?
Investor education.
Do you need university education?
Investor. Investor education, entrepreneurship, understanding.
Yes, it is important. But then what do you need to be in a classroom to receive that education? Or it is something you can read on your own and also learn from entrepreneurs that have been successful. I feel like, because we've seen a lot of wealthy people, many wealthy people have never actually graduated from universities. In fact, world over, even the Mark Zuckerbergs, these are people that are college dropouts. And so education is important for you to run a successful business, but it should not be a deterrent for you to pursue entrepreneurship if that is what you want to pursue. For me, I think that having a passion for business is what will ensure that you excel. Because if you are passionate about your business, you are going to learn. Through experience and with time, you're going to learn and you're going to figure it out. And now we are fortunate you can even teach yourself a lot of things in terms of business management. And we've got a lot of companies that offer training, how to manage your money, cash flow management, debt management, what is profit, what is gross profit. You can learn all these things. But the key thing for me is passion for what you are doing, if you are able to be passionate, you've got a muscle, you'll be consistent, and you're definitely going to succeed in the long term.
All right. Yeah, very, very interesting indeed. Business is just something else. Very interesting. Before we wrap up, we have to wrap up very soon. But before we do that, another aspect of business, business and working, those two things. How do you know that this, or rather, at what point can you start business? And is it advisable to be mixing business with work? And at what point do you say, okay, now I'm going into business and I'm leaving work? Because I know you were an employee at some point. You decided to leave employment and go into business. It makes me wonder, do you ever regret it? At what point did you know that it's time for me to move into business? And has it paid off the way you expected it to?
Very good question. I consider, for me, I think I was fortunate to have the right mentors in my life, because I've always known that work is supposed to be used to learn skills. Yes, you're supposed to offer the best service to your employers that you can and that you should, and learn as well. So for me, even as I was working, I always had that mindset of I need to learn. That's why when you look at my career history, I worked for different companies in different sectors. And when I'm not learning, I get bored. And I move quickly to another organization. And that is what I was experiencing in my career. I was fortunate to be employed by the best companies we have in Zambia. And had I continued in full-time employment, I would probably be director at a financial institution or whatever. But for me, I already knew my career path. I already knew my life goals, and business was it. So even as I was working with the mindset of acquiring the skills. And so having acquired sufficient skills, I felt it necessary for me to also help fill in the gaps with bookkeeping, financial management, financial training. Because I've noticed a huge gap, especially with financial management training programs. Majority of the companies we see that provide financial management trainings come from overseas. We've got very few companies that really do a good job in terms of financial management training. And so it's a gap that I hope I'm going to be able to help fill in a small way or in my own way, because I feel it is necessary for us to provide world-class financial management trainings to corporates as well as individuals, even in personal management. And so can you do both? Can you be in employment as well as pursue your business? Yes, you can. Serve your employers in the best way you can, but also know that consider your employer as a client. You're offering them your service, and that service can also be offered to other clients. So when you are working, get all the skills you can. You serve your clients really well, such that by the time you're leaving your employment, you can start the business. It's like you are continuing now, you're just expanding on your clientele base. And so how do you get started? When you are young, you are focusing on acquiring the skills and the knowledge. So focus on acquiring the skills and the knowledge. As you start growing older, you can then start creating a plan for a business. Create a plan, a vision of what you would want to do, and then start trying it out part-time. Slowly start trying it out and seeing whether other people would actually be interested in what you're doing. And as you start trying it out in your part-time, in your spare time, aside from your employer's work hours, you can start testing and seeing whether your business idea is viable. Other people can actually buy into it. And then that can help you make the decision whether you can pursue full-time business and quit your job, or you can continue in employment until you are comfortable enough to pursue your business venture. So that's how I would look at this.
Okay. Now, as we come to the close of the show for this morning, the president recently launched the revised national youth policy, and so right now the focus is on young people. What would be your last words, to young people right now, as young people who are interested in business?
Young people, this is your time. There's never been a time in history where you've got all the resources available, the right mentorship networks, the right support. And it's the right time for you to pursue entrepreneurship if that is what you want. So take it up, challenge yourself, have an open mindset. and just trust that everything is going to work out in the long term. What is important is discipline and consistency. You have all the resources available to support you. And when you make a decision, let's say pursue entrepreneurship, as you start doing that, you are going to find people that want to help you. There will always be somebody who's ready to help you. And that's why, Leslie, I would like to actually take this opportunity to thank everybody that has been instrumental to my path. It's not been easy, but they've been very key people. And I must say, even ZNBC themselves, they've been very key people that have been instrumental on my journey, even as as I pursue this journey of serving people and helping contribute in my own way to our economy.
Right. Well, Mokonki, thank you very much for making time and, of course, appearing on the platform this morning.
Thank you so much, Leslie, and we'll see you next time.
This has been the platform on ZNBC's Radio 4, and of course, until next week, financial literacy is very important. So definitely make an effort. Just make an effort and try to learn as much as you can, about finances and how to manage them. It can be the difference between you retiring wealthy and being destitute. That is actually the difference. Until next week.